Hey traders, today is Wednesday, June 10th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-timeframe look at the Australian dollar. We've been down 4 out of the last 5 weeks, a decline of nearly 3.8% off the yearly high, breaking major support last week. Here's the weekly chart. 71 was a basic 38.2 retracement of the advance from that late March low. The median line for the current formation we've been tracking since November was right there. It offered support all throughout last month. Here's the break last week, really extending into the 618 retracement this week of that same rally. 70 proper is the focus right here into the start of midweek. And we're looking for a reaction there. If we break that Fibonacci level lower, the next major key zone of support rests with the 2024 swing high, which converges on broader uptrend support near 69.43. So the initial focus is on a reaction here. The threat is still lower, basically well below 71. Next major level of support comes in near that 69.40 level. Here's what it looks like on the daily chart for the Australian dollar. So there's the severity of that 71 break. That was last month's close low as well. There was the median line Friday, really accelerating with that drop. And here's today's drop now, testing that 618 retracement at the 70 handle. Looking for a reaction here. The risk remains lower while within this channel converges on that 38.2 retracement near 71.08. A downside break below this zone, below this channel, exposes the next major key support, and this is the broader bullish invalidation level. You're talking about 69.13 into 69.42. So already discussed 69.42 is the objective 2024 swing high. The high day close extends just a bit lower to 69.13, and that whole zone converges on that lower parallel, again, over the next few days, basically into mid-month. Here's what it looks like on the 4-hour chart. An objective pitchfork just off of the highs here, that secondary high into the close of May, has been really nice with the interior levels. Here's the lower parallel catching support, and once again, further highlighting that 70 handle. Just in case that wasn't enough, the 100% extension, so 2 equal legs off the high, converges right here at 70.02. So 100% extension from the highs, a 618 retracement from the lows, my favorite fib confluence, looking for inflection along this zone. Initial resistance is at the weekly range high. That comes right along the median line near 70.78. Near-term bullish invalidation, if Aussie is heading lower on this stretch, rallies would need to be limited by 71.08. You need a break below 70 proper on a close basis to mark resumption or the next major leg of the decline. And then you're looking for 69.42 to 69.13. Beyond this zone, by the way, would be a major break for Aussie. There's really nothing that comes into play until the 200-day moving average, which converges on the lows from March. You're basically looking at 68.35. So the setup is pretty clear. The levels are very clear. Initial resistance 70.78, bearish invalidation 71.08, near-term support the 70 handle, downside break from there. Look for a potential accelerated drop towards 69.42, 69.14. Now, by the time this video is released, we will be getting the US CPI read for May. That is expected to heat up quite a bit. Headline is expected to come in at 4.2%, whilst the core rate is expected to uptick to 2.9%. This read is likely to be a significant one today ahead of next week's FOMC rate decision. Kevin Warsh's inaugural Fed decision will be out on Wednesday. We also get the RBA rate decision next week as well. So there is a lot of event risk for this pair as we head into next week. Obviously, the headlines with regards to the war continue to take central focus for the markets with what seems to be an escalation in tensions here today. We'll try to keep you updated as always on MB Forex. Till then, best of luck trading, and we'll see you tomorrow. Cheers.